FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex trend and is advancing the Copper King project towards production in Wyoming, led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange, under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 4/10/19. Well, markets go up, markets go down. Our job is to try to figure out what's going to happen and then invest accordingly. Sometimes, well, you can always use all the help you can get, even if that help is coming from the stars. And we've had other investment astrological authorities on the show now, but here's a person who used to run a fund and kind of had to lay off because of Dodd-Frank. But his name is Henry Weingarten, and afund.com is where you find his info. And hey, as always, questions, comments, something gets you, be a part of the show, and email us at kl@kerrylutz.com. So, Henry, it's really great to have you on the show. I've been looking, since we started the show 8 years ago, I've had literally thousands of people on the show, financial experts from every area, but very few of them are effective forecasters. In fact, I would tell you that the most effective people out there have generally been the cycle people. And really, cycle investing, tracking, isn't that much different from what you do, is it?
Yes and no. Effectively, astrology is cycle work, although it's irregular cycles. So it's a little bit different because the planets don't move in circular orbits. In addition to which, there's 2 types of astrological analysis. One, which is pure cycle analysis, and the other is using the birth charts of countries, stocks, and stock markets. And that's a little bit different. But there are a lot of similarities, yes.
Yeah. So it's just different types of cycles, like you say, on the one hand, and then actually honing in on where the stars were at for particular birth charts. So where we're at right now, stock market, what are the stars telling us?
Well, there are a couple of facts that we like to look at. And I assume we're talking about the markets. We're talking about U.S. markets?
Yeah, U.S. markets.
Global. Okay, yeah. Primarily. Okay. More or less, we're at a very traditional time. The old saying, sell in May and go away, which very often is true, was not true last year, and in our opinion was not true. This year, it's doubly true. So we believe in the next 1 to 3 weeks, markets will be on a short-term top. We'll see somewhere between a 3 and 10 to 12% correction in between May and June. But they will be higher at the end of the year. So if you can imagine how you felt in October, November, if you were very upset, then I recommend doing something about it by either selling some stocks you don't like, writing calls, buying puts, that sort of thing. But if you don't care, because obviously the markets are higher than they were then you don't have to really act because they'll be higher at the end of this year. U.S. markets tend to follow Trump's horoscope quite a bit. That's something we predicted over 14 months in advance of the election. And roughly speaking, for the first 6 months of the year, it's a little bit difficult. The second 6 months of the year, roughly speaking, it's much more favorable, which will show up in the market. So for the next month or two, it's going to be a bit rock and roll. There are a number of terrestrial reasons this can be the case. Everything from earnings being somewhat upsetting, maybe a surprise meeting of the Fed where they tighten up a little bit in terms of their outlook. Brexit's coming. There are a number of things that could cause it. But nonetheless, there's about a 90% risk that the markets will be down over the next 2 to 7 weeks. So we recommend preparing for that.
Yeah, it's been a little bit of a rough year. We started out on the downslide and then turned around pretty quickly, brought us up to where we are now to near record levels. And so Trump's astrological chart, I wasn't going to get into this now, but you raised it and saying that it seems to parallel the stock market. What does his chart, what does it tell us?
Well, that's what I'm saying. He has a relatively rough time. It's not smooth sailing, but it will be much more favorable in the second half of the year. So he's going to get a lot more of his policies done. Right now, he's still being stymied quite a bit. There's obviously still a lot of issues that he has to deal with, but we think he'll have more of a free hand going forward, and that will show up in more positive stock markets.
Interesting. So,
yeah,
sure.
I was just going to go to some of the other areas because I know in addition to markets, you're interested in gold and oil and all that sort of thing.
Yeah. So.
Now, I would like to say that when we do our analysis, we tend to be top down, where in the world we want to invest, what countries, what sectors, down to the stocks. And we also, in addition, we do fundamental and technical analysis as well. So if we take oil, I was just at OGIS, which is the independent oil and gas meetings the last 2 weeks, and they tend to agree with us that oil is a little bit high. Belongs, they believe, between 55 and 60. We believe it belongs between 52 and 58, but it's close enough. So right now, oil, as it's approaching 65, is for us a sell or a short. Oil stocks are not performing as well as oil itself because many of them think we're going to go back to 40, which is not our view. So we just think it's on a short-term to intermediate-term basis, somewhat of a sell here a little bit earlier, and we actually putting in shorts between 62 and 65. That's one area. Gold, we were basically very bullish coming into February. But between now and May, June, we tend to be more on the short side of it when it went to 13.25. So as traders, we tend to sell rallies. But as investors, we want to basically buy when it comes down. So far, the 1280 is held. It's possible it will go as low as 1250, but we doubt it. Our view is it's going to go to 1370 plus, which is what it's worth. The most important thing to know is that this December, gold's going to be higher than it is now. And the December of 2020, gold's going to be higher than it is this December. So as an investment thesis, even though it will be a rough 2-3 months, which is backed up by fundamentals, you can be a buyer on weakness.
That's interesting.
And that's actually the basics, I think, that you're interested in.
Yeah. So gold, basically you're saying that it's been trading in a channel, pretty narrow channel for the past 3 years.
Correct, but it's an upward channel, and that's the important thing to remember. And basically, lots of investors are basically bullish on commodities and healthcare. And the big, excuse me one second. The big difference is that for the first time, generalists are coming into the market. So in the last 4 or 5 months, you've seen outside the true believers, lots of people looking to gold. And that's very bullish long-term for the next 2 years. So you see it in an upward trend. Our biggest interest, though, in the metals is in copper. We're very bullish on copper. Copper is a little bit under 3. Went as high as 320. We believe we'll see 350 to 370 by the Chinese New Year. We used to predict up till the New Year, but now because of the influence of China, we predict up to the Chinese New Year. So effectively, we see that as the strongest situation that you would, if you're interested in just doing one metal, it would be copper. But of course, it's always good to have gold because there are a number of reasons to buy gold. The most important is it's a hedge against the U.S. dollar, which is very important. But also there are many people in the world who cannot buy the U.S. dollar and who want to buy the U.S. dollar, or they want to hedge the U.S. dollar. And all of these people, gold is a good investment. And if you look at outside the dollar investments, you look at it in yen, you look at it in the British pound, you look at it in the Venezuelan bolivar. Obviously, it's a tremendous investment, better than it's been for the U.S. But it's an easy hedge because, to short the U.S. dollar is a bit of an issue because what are you going to buy? The euro? Euro's a mess. The British pound is very iffy. I mean, there's tremendous risks everywhere. And so you don't necessarily want to go against it, but the easiest way, it's the cheapest insurance, especially at the moment now, under 320, under 325. So we like it on a long-term basis.
So what about silver? Silver's been in a rut for years now.
Right, correct. Silver's worth 18, but it's playing at 15. And that's primarily due to a number of reasons, because it's really not about silver. It's because silver is a byproduct of other metals. So it's really what these other metals are doing. It doesn't have a great horoscope. It's very neutral. It's also an industrial metal, and right now the global economies are somewhat slowing down. So if you're a long-term player, it's a very good buy. If you're a short-term trader, you're going to have to sit on it and sit on it and sit on it.
Yeah, it's hard to trade too, because it's just not moved very much. You know, what's it going to do? Go down another 20 cents and break $15? Go under $15? It just is a tradable metal. There's better choices for sure. So,
absolutely. But on the other hand, if you had to look at it for 3-4 years basis, it's better than money in the bank.
Yeah. Luckily, I bought all mine at between $7 and $12 an ounce. So I'm not like
you're in good
concerned.
shape,
and most of it below 10. So, and there's great deals in it to buy the metal, because it is so depressed and so demoralized, this market, and it's a tiny little nothing of a market that if there was renewed buying interest, it could shoot up $5 overnight with no problem. So
right. The big change in the markets that may be coming, of course, is whether or not the U.S. and China come to agreement, and then, of course, how well the agreement is kept. And that's likely to be known in the next couple of weeks. Assuming it's a positive, then we're suggesting selling that rally, because that comes into our May time frame. So some of it's already built into the market, which is why we're near record levels. We suspect if it is agreed to, then certain stocks will do better than others, certain agricultural stocks, et cetera. But it's something to short-term exit.
Right.
Unless, again, you don't mind a 3 to 10% correction, that's going to go forward. Again, it depends on whether you're an investor or a trader.
Yeah. So, hey, as far as the charts, are they telling you anything about it's an inevitable agreement, in my opinion. It's going to happen. I mean, I could be wrong, but it just seems to me that it's in everybody's interest to see that it does. What are the charts saying?
I don't disagree with that, but the issue is really not that. The issue is the adherence to it,
yes,
and what happens when they break it, which they will. This is,
of course,
to say that China was not a currency manipulator is a joke, but there obviously were reasons for that. So the issue is how they're going to deal with it. But short term, it's a positive, because obviously they're going to do a buying of lots and lots of
stuff, American stuff,
lots of stuff. But on the other hand, China has a very strong Saturn in its horoscope. One of the reasons it's had a very rough year. It's a crisis in China, but if you know the Chinese pictogram for crisis, it's danger plus opportunity.
Correct.
So it's a positive, but they have tremendous debt. And all the issues that people talk about China is there. And if you're a supplier, you're diversifying outside of China, because look what they've done with Canada. And that's outrageous. They're very stupid in the way they're playing Canada, because China needs Canada a lot more than Canada needs China.
And Australia, too.
Yes, exactly. So there you have. By the way, we like Australia right now, especially if you look at Western Australia with the Australian dollar in the low 70s. It's a very good mining district, so it's coming back on our radar for that reason.
The biggest, yeah.
But, it's definitely a good jurisdiction. But you have the issue that if you're a manufacturer, you're diversifying out of being a sole supplier in China. You're either moving it back to the United States or moving it elsewhere in Asia, whether it's India, Pakistan, Bangladesh, Philippines, etc. So there are a lot of long-term changes for China, which can be very positive, quite frankly, but short-term are going to be painful.
Yeah, well, it's
regardless.
It's got to become more consumer. Not to say that the savings rate is a negative by any stretch, because that is how true wealth is built. In classical economics, everything gets financed out of savings one way or the other. So as far as currencies, dollar, euro, yuan, what are the
my favorite
saying?
one would probably be the gold. Although gold doesn't have a great but the problem is gold doesn't have a great horoscope. It has a good horoscope, but not a great horoscope. Not like it did, 2 years ago when it made those moves in January. It had a great horoscope. So it's slightly positive, more than negative, except for the next 2-3 months. So it's going up. The other ones are going to be subject to all sorts of, it's trader's pleasure.
Yeah.
The Fed messed up very badly in December, in our opinion. It should not have raised rates in December. It should have done it in January. And that's not an astrological call. That's just a common sense call. And because of the Fed's lost credibility, they're unable to predict between 1 month and the next crises, which is pretty pathetic. I'm sure they're capable of it, but they didn't convey it properly. So they're obviously following the markets much more than they should. And you have Trump pushing to them to lower rates, which they probably won't do, but because of that, they won't raise rates much, which is really what his plan is, to keep them from crazily raising rates, although a certain amount of raising rates has been very good for the economy. It's one of the reasons banks are lending, et cetera. Yeah. But it's a question of the pacing. That's not an issue anymore. But you've got emerging markets as a big crisis, and there are lots of places where there are things like happening in Turkey and elsewhere. So you've got a lot of danger points around the world because of roughly the strong dollar and as I said, a Fed that is not communicating well, to put it mildly. Yeah. So at the moment, we're not really, the only currency we're really interested in, that we're comfortable with is basically gold. But again, it's not to make a lot of money. It's just a good place to keep your money.
Yeah, wealth.
The other currencies that we would like longer term would be the Australian dollar and eventually the Canadian dollar, both of which are resource rich and will be doing better next year and the year after, but there's no reason to rush into them quite now.
They've been in the dumps for years as well. I mean, yes. Canadian dollar, 75 cents, and the Aussie dollar hit close to the low 70s. And it's kind of surprising because at the height of the crisis, shortly thereafter, they were up to 125. They've been trading at parity for many years, the Aussie and the Canadian, and now they're kind of decoupled a bit. And they've been net losers for sure, and Canada for sure.
Right, but also because obviously there's lots of issues with China, both in terms of direct investment and the government not wanting to be overwhelmed. So they've got a lot of issues there. But on the other hand, it's very good if you let in the mining space as we are, then Australia now is very much on the target. And obviously Canadian miners benefit from the lower cost as well. Right. And we think oil is sort of topped out here, give or take. Certainly on an intermediate term basis, it's topped out. And that's a very important ingredient for oil mining as well as for economic activity as well.
Yeah, I think the mining sector in the next year or two is going to be the surprise story. The juniors, the return of the juniors, where they're actually able to raise capital because, we're consuming all of these metals, all of these minerals, and there hasn't been adequate investment to replenish the depleted reserves of the major producers. And that can only go on for so long, right?
Yes, we absolutely agree with that. And we like playing the high-risk parts of people's portfolios, and that includes lots of stocks that are in the small cap, micro cap area, as well as some of the mid caps as well. Yeah, no, definitely these are relatively safe long-term investments. They've been out of favor for long, but over the next 2 years, they're coming back on the radar of a lot of mainstream investors, yes.
All right. Well, hey, I think you've given us a great view. It's really been wonderful having you on the show, getting your perspective. I mean, you got a lot of years doing this, and it's there's definitely a science to it. So afund.com is the place to find you, Henry.
That's correct.
We'll have a link in the show notes to this interview. Hey, we'll definitely talk to you again in the near future. You're on our list of astrological market financial experts.
Thank you very much.
Hey, and by the way, any questions or comments, email me, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. Henry, we'll talk to you again real soon.
Thank you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.